Okay, what is up, traders? What's up, tycoons? Super excited for today's video, coming at you with a viewer request on KMB. This is Kimberly Clark. Now I'm going to break down the chart here on the weekly time frame. That's the chart that we're looking at. We're going to go over the RSI, the relative strength index, how you can use this to your advantage to help you out, along with the MACD. Okay, you can use this for both possible entries and exits in the stock market. It's really good when you can start to combine a couple strategies together. So we're going to go over a couple of the different strategies you can use, as well as take a look at the Bollinger Bands. Okay, the Bollinger Bands are also pretty useful. So we'll go over a couple different studies and different indicators that you can use. Now, this is a part of my 50K portfolio. If you haven't seen any of my 50K portfolio videos, I do have a position here in KMB. I have about 50 shares at an average cost of 115, basically 115. It's at a little bit under 115 at 114. Up about 12% on that position. And I have this mostly because it's a dividend stock and it had a good setup. So we'll go over the setup that I saw. We'll break down what could happen in the future and the current price levels that we need to hold, or otherwise we could get a reversal. So make sure to smash the like button, subscribe to the channel if you guys are new, and we'll jump straight into it. So the first thing I want to highlight are going to be these circles here. We have what's known as a low and a lower low, right? So clearly the stock is in a downtrend making lower lows. But if you take a look at your relative strength index, this is going to measure the relative strength of a stock at its given price. And we can see that we have this low here and we have a very low on the RSI. And we come up, we actually make a higher low at the same point that we make a lower low on the chart. So while the stock has dropped in price and made lower lows, we've actually increased in relative strength and made a higher low. This is something known as bullish divergence, and it's an indicator you could see some type of bullish activity, right? So we have bullish divergence right here. And very shortly afterwards, we get a MACD crossover, right? So a MACD crossover is also sometimes known as an entry signal when this blue line here crosses up above, right? So you notice how it crosses up above and then it starts trading with some good momentum to the upside. That's going to be known as an entry signal. So what do we see? Initially, we get the bullish divergence right here. And then very shortly afterwards, right here, we get a MACD buy signal, an entry signal. And this is right around where I started my position, right? If you take a look, this is right over here at just under 115 once we got that MACD entry signal. So, just showing you guys that, these strategies do work. No strategy is 100% guaranteed. Bullish divergence alone might not have given us the right signal, or a MACD crossover alone may have not given us the right signal. But, combining some strategies together can give you a little bit more faith and a little bit more confidence. Already collected a dividend here, 116 per share at 50 shares. That's about $50 roughly, right? It's got another dividend coming up in March. I believe this is, in the beginning of March, will have its next dividend payout. So, if you're looking to enter a position into it strictly for the dividend and not so much on trading the technicals, then, you have, I don't know the exact ex-dividend date, but that will be coming up here very shortly. Okay, so the next thing we're going to do is kind of go over the Bollinger Bands and just show you guys how they work. So if you're not familiar, that's what these three lines are on the chart, and these give you standard deviations. So typically when something falls below the bottom Bollinger Band, it doesn't really stay there for long. And when something goes out of the top Bollinger Band, it doesn't really stay there for long either. Notice how we go up and then we come back down into our range. We come to the bottom Bollinger Band, we trade outside of it for a short period of time, and then we come back up. We enter outside of the Bollinger Bands. We're trading at the top of them, and then we come down. We come out below the Bollinger Band, and then we end up rising. Okay, same thing over here. We were rising. So not only did we have one indicator here on our relative strength index, and then a second indicator here on the MACD, we also had a third here that we possibly could be seeing some bullish activity because we're trading outside of the bottom Bollinger Band. Now we've risen up and we're up near the top of the top Bollinger Band. And this middle one often acts as a support or a bounce level. Now, it's not the greatest indicator, okay? If you take a look here, we really just blew right past it and headed down. And then over here, we blew right past it and headed up. But it's a good area for you to potentially catch support, right? So if you look over here, we did bounce off of support here on the middle Bollinger Band ultimately before breaking through it. So I'm going to be watching closely to see if we break this level. Now, not only is this good for, spotting potential support and resistance level and letting you know when something's potentially oversold or overbought, right? If you're outside of the Bollinger Bands, then technically that would be what's known as like oversold. And if when you're outside of the top Bollinger Band, that would be overbought. So right now we can see we're right in the middle and we're really trying to hold this middle Bollinger Band as support. What are some other levels that you can use? Well, if you take out your fib tool, right, what we're going to do is connect this swing low here up to our most recent swing high. And it's going to give us our major retracement levels that we need to hold for support. Now, notice how our first one, the 38.2% retracement level, is lining up nicely with the middle Bollinger Band right here. And that's going to be at 128.29. What I'll do is I'll actually put this over here to the right and show the coefficients on the right so that you guys can see the levels clearer. Now, there's three most important and most respected ones. There's the 38.2, the 50%, and the 61.8% retracement levels. Those are going to be the three most common and most respected, and the ones that I recommend for beginners to use if you're new to using the Bollinger Bands. But there's also the 76.4, which is what I like to call the fake out level. Sometimes, we do break down below this 61.8 and end up finding support at the 76.4 before retracing and really continuing the move. Now, the reason we use these Bollinger Bands is because nothing moves in a straight line up or a straight line down. What it does is it helps you spot trend continuation. So an upwards move of pullback, aka retracement to the major retracement levels, and then continuation higher. Or in a downtrend, it would be a downwards move, retracement to your retracement levels, and then continuation lower. So you can use it to spot trend continuation. So if we move up and we're getting some type of a pullback, earnings wasn't the best, right? If we take a look at the news, they have gotten a few downgrades. All right, we can see Barclays adjusts price target, downgrade. Goldman Sachs cuts price target. Wells Fargo lowers price target. So, this is a little bit of a negative catalyst that the stock has got that's been causing, some downwards pressure on top of earnings. But if we zoom back to our current price action and what we're looking at right now, we can see that we're holding our major retracement level right here at the 38.2, and we are testing our middle Bollinger Band. So, if we do break below these levels, right, then our next support is going to be 124.56. And then after that, it's going to be 120.84 and also 116.23. Those are all going to be the major support levels. Now, let me give you a visual to show you how you can see if you're going to get a reversal when you break through these, right? If we take the low from over here up to this high, you can see that ultimately we did break below these levels and got a reversal, right? So instead of getting a trend continuation and making new highs, what we did was we came down, consolidated a little bit, and then broke through our 76.4 retracement level, flipped that to resistance. See, we came down, flipped it to resistance, and then we made new lows. So if we end up breaking these major levels, then most likely we are going to see some type of a reversal and possibly head back down lower to either retest our previous lows or maybe even make new lows. You can look at it over here as well, right? If you do it, if you take this low up to this high right here, you can see we broke through our our major retracement levels, okay, and then we ended up getting a reversal. So rather than getting a move up, retracement, continuation higher, we got a move up, retracement, consolidation, break through our retracement levels, and we made a new low, lower low. Same thing here, right? We have a low, we moved up, retraced, consolidated a little bit, broke through our retracement levels, and made a new low. So that's basically it. That's everything that I'm looking at for KMB right now. There is one other thing that I want to show you guys that's more of a bullish scenario that we should be out on the lookout for. And that's actually going to be an inverse head and shoulders pattern forming right here. So if we take this high, right, we have a left shoulder here, we have a head, and we're starting to form a right shoulder, which could possibly take KMB back up towards the top of these Bollinger Bands. So it's going to be really critical. If we basically go back here and throw our fib retracement levels on, we can see that the major levels that we're really going to want to hold, okay, is really going to be, again, the three major support retracement levels versus the four, right? So our 61.8% at 120.95, if we dip all the way back there and get a bounce, then that's when we really have the potential for this head and shoulders to play out. And if we break down below there, then that's basically going to negate and cancel out this pattern that we're looking at, because basically it would be too low and it would be a little bit too low for the inverse head and shoulders. So keep an eye, Even if we do dip down to 120.95 and we get a very strong move to the upside and break our previous high, like for instance, this trend line right here, okay, then we could get the head and shoulders to the inverse head and shoulders to play out to take us up from anywhere about 140 all the way up to maybe even 146. So that's it for today's video. Hopefully you enjoyed it. Hopefully you learned something new. Don't forget, I do these viewer requests every week. So if you like this update, you like this analysis, all you have to do is comment down below and I'll make a video on your stock as soon as I can.